We got you. What's good? How are you?
I'm good. How are you?
I'm good. I'm good. I'm excited to have this candid conversation with you. Obviously, I was kind of filling in everybody who was watching the live that about 2.5 months ago, I posted a post about the 0% down program at Bank of America for minority communities. There's like 5 or 6 communities where this program is getting rolled out. I got about 115 comments, and 99% of them were very favorable of the plan, or some version of that. And then there was you, who was maybe, let's just say, a little bit more skeptical of really what was going on there. And so I wanted to, on the comment chain, I said, let's talk about that. And so I wanted to have you on so we could kind of discuss the real thought behind it, and I could hear out. Well, okay, so I'll summarize the entire post just in case anybody missed it, right? And so for anybody who missed the post, basically Bank of America announced that in 5 or 6 select communities throughout the United States that are predominantly Black or Hispanic communities, they were going to roll out a 0% down payment mortgage program. And so it's the same type of mortgage elsewhere, but they took away the down payment requirements. And then as well as the credit requirement. So like most conventional loans have some sort of like a minimum credit requirement. They're doing away with that program as well, or that part of the program as well. So home buyers could actually qualify by showing like rental history, utility bills, things like that, in case they don't meet the minimum credit requirements of a normal conventional loan. So in the video, as I was sharing kind of the details, I talked a little bit about redlining, and sorry, I hear someone else talking in there. I talked a little bit about redlining and how in the past, banks especially had been known to, maybe draw out certain areas where they wouldn't lend, and how it caused like an income inequality throughout the United States history. And so I said at the very end of the video, I said, so even if that was what Bank of America was doing, is helping brown and Hispanic or Black and Hispanic communities, would that be such a bad thing? And your comment was, yes, it would. And so that's what sparked off the whole thing. So now I want to hear kind of your take as to why that would be bad, and then we can jump into it from there.
Well, first of all, I'll say that had they been giving equal opportunity to everybody, this program wouldn't even need to exist in the first place.
True.
So,
you get no disagreement from me there.
yeah, so that's number one. And then number two, I haven't heard any more information about it ever since, they talked about the initial release. So, this is like a piloted program that they're releasing in certain areas only, right?
Right.
So those areas.
Hold on, I've got it pulled up here. Do you have it?
Yeah, Charlotte, Dallas, Detroit, LA, and Miami.
Yeah, and it's not even the whole city of those, right? It's certain neighborhoods within those neighborhoods. So certain neighborhoods within those 5 metros that are over 50% Black or Hispanic.
Right. And they're doing the no down payment, the no closing costs, not using any credit scores, right?
Right.
So they're doing like a special credit program where they're going based on you paying your rent, your utility bills, your phone bill, and insurance.
Correct.
And so everyone's question is, well, that doesn't sound great, because everybody knows what happened in Delray, right? They were giving mortgages to anybody with a pair of legs and a heartbeat.
Right.
And we all see how that turned out.
Yeah.
It just doesn't seem like, allowing that to the quote unquote Black and brown communities in real estate. We know that's a recipe for disaster, to come in with nothing, nothing.
So is your overall take more on the macro scale, that just giving anybody a 0% down payment is just a bad idea because of the risk involved?
Yes, but they're like specifically gearing this towards a certain community.
Yeah.
Now, not to get it misconstrued that it only Black and brown people can qualify, because it clearly states it's for anybody in these areas
who lives in the neighborhood. Exactly. So you don't have to be Black or brown.
Right?
You can be white and live in the community.
Black, brown, Mexican, Samoan, Filipino, whatever.
Correct.
People who live in those and in that census tract can apply. But again, as professionals, we know that going into this type of situation with nothing is a bad idea.
So you still have to qualify, as far as I know. Now, the program's not here in San Diego, so it's not like something I really know that much about. But as far as I know, you still have to qualify, like from a monthly payment standpoint. You still have to be able to afford it. There's still debt to income relationship or debt to income restrictions. So it's not like they're going to qualify someone for a house they can't afford based on their payment or based on their income. They're just doing away with the down payment. So like the problem with affordability for a lot of homeowners, not just black or brown homeowners, just a lot of people, is that the affordability is not there. Maybe they could afford the payment, they just don't have the down payment. So what they're trying to do is they're doing away with that by then having this special grant. But you're right, the bank is theoretically taking a bigger risk because now the home buyer doesn't have as much skin in the game. Because so like if they got tied up, they lost their job or whatever, there's a much higher risk that they would walk away from their mortgage because they don't have a down payment in it.
Right. They did say that it would be based on their income and location, right?
Yep.
Because it's happening in designated markets. So are they allowing people to only buy within those communities where they rent? Because it seems like they're kind of, boxing them in, and that's giving me redlining vibes.
Expand on that a little bit more. So you're saying maybe then so if they're in the community, say the suburb of Dallas or whatever, and they qualify for this program because they live in that community, do they also have to buy in that community or can they buy outside of the community? Is that what you're asking?
It's giving that they have to buy within that community, which is why they're giving the people the program in that area that is the 50 to 51% predominantly black, right? And so I'm like, if you're giving me this program and you're allowing me to buy, why am I not allowed to buy anywhere I can afford to buy? Why does it have to be specifically in these areas? What if I rent here because I rent here, but I don't want to buy here?
That's a really interesting thing. So is it about the housing that's in that metro, or is it about the people that are within that metro? You know what I mean? I wonder. So I don't know the answer to that. I don't know if it's B of A is restricting you into that area or whatnot. So that'd be interesting to dive into. If anybody has this program in their metro, please let us know. So my secondary question here is, because I kind of said, like, would it be a bad thing? And so like my theoretical thought is that it's very similar. I see someone mention it in the comments too, to the VA loan, right? Because at the VA loan, you can buy with 0% down. The only contingency is you have to be in the military or have served in the military. So in this case, you can buy with 0% down if you qualify based on your income, as long as you live in one of these communities. So now you have a very good question. Is it like, do you have to buy the house in that community, or can you buy outside of it if you're in the community? I'm not sure, but I just don't know that taking away the hurdles to home ownership is a bad thing necessarily. I wasn't quite getting that vibe per se. You did mention in one of your comments, I think. Okay, so here, I'm actually going to read your comment word for word. So I said, why is that? Expand. You said, it's not rocket science. The bank puts these parameters in place to lend to financially responsible people. Just because those people pay their rent, people don't like to be homeless, is in no comparison to defaulting on a mortgage. If you don't pay your rent, you get evicted and possibly owe a few $1,000s. If you default on a mortgage, you owe hundreds of thousands of dollars, and the foreclosure process is 10 times as long. Not to mention, I'm assuming, and this is where I think you have a valid point to a certain extent.
That was going to be my next point as well.
Is that, not to mention, I'm assuming the interest rates would be sky high, which is not helping people in those communities by giving them mortgage payments that they can't sustain. Had they been giving everyone with an equal fair chance to begin with, these programs wouldn't exist. I'd be homeless before I accepted a mortgage from B of A or Wells Fargo. Okay.
Correct. And that was going to be my next point to you, speaking about the VA. You know, I'm certified MRP, military relocation professional. You know, I'm born and raised here. I know a lot of military. 90% of my clients are military. We know, looking at rates, VAs get different rates.
Yeah.
So even though they have a no money down loan, they also kind of get, very good rates because they are VA. This program for these people are not going to get those rates.
Yeah, you're absolutely right.
I'm assuming that the rates are going to be a lot higher because, as you already stated, the bank is taking a higher risk, correct?
Correct. And that's that was my assumption too, because the VA is backed federally. So there's grants behind it to be able to offer them the low rates, because the bank is actually going to make that back. Whereas here, it's just Bank of America trying something out. It's not a federally backed program. It's a private company, B of A, trying to make profit. Like, let's be real, they're not a charity. They're doing this to open up a profit line, because they're trying to get mortgages from people who wouldn't otherwise qualify for mortgages, because then they have the mortgage, so they get the interest rates, they get the payment and all that type of stuff. So my assumption was that it would be a little bit of a higher interest rate. Just like if you put 3% down now versus 20% down, your interest rate is probably a little bit higher. Well, now if that person's putting 0% down and they don't credit qualify, it's probably going to be dramatically higher, right?
Right. And that's the aha moment, right? Where you said, well, why would you necessarily think this is a bad thing? Because we, as in me, we know how they disguise these things to make it look like it's a good deal when it's really not. It's like you always have to read the fine print. And the fact that there was no mention about interest rates, they literally mentioned everything else. No down payment, no closing costs, no credit check. They literally mentioned everything else, but the most important piece, which is the rate, because that determines your monthly payment. And again, people can qualify all day. But again, like what you read in my comment, to be able to sustain that payment at that rate, it doesn't seem like that's moving the people forward, especially if they're restricting them to buy in, quote unquote, what I read, designated markets.
Yeah. Is there because I don't know what the rates are either, right? Like I haven't seen the program yet, so I don't know if it's a little bit higher or if it's the same or what. Is there in your mind, like, is there like a number to where it's like, okay, I understand like maybe 1% higher or 0.5% higher, or is like anything higher than the average becoming predatory to a certain extent, right? Like what's your take on that?
Well, I mean, we have to consider other down payment assistance programs, right? Are you familiar with other down payment assistance programs and what they offer as far as rates?
Sure, a little bit, yeah.
Yeah. So, I mean, could we say like, okay, we understand they're taking a higher risk, so they're going to charge them more. But again, places like in LA, right, where the rent is sky high, even here in San Diego, the average 2-bedroom was what, $2,800, almost $3,000.
Yeah.
So how is that helping the community by charging them more?
Yeah.
You know what I'm saying?
So
that's what I don't understand. If you're charging them more, and again, I'm assuming that they are restricting where they can buy. Again, once more information comes out, we will really see. But as of right now, the way I'm reading it is that they are limited as to where they can buy, and there's no mention about what the interest rate could possibly be. They do have to do typical down payment assistance criteria. Going through a first-time home buyer certification course. They will be assigned a Bank of America HUD advisor counselor, having to go through those people and use those people, which if you've ever dealt with a client, doing down payment assistance, it can be quite frustrating dealing with these counselors because they're very hard to get a hold of.
Yeah.
They're very hard to get a hold of. You try to call them and get information and you can never talk to anybody.
Yeah.
So it's very frustrating to deal with that. But what I also found out, in addition to the program that Bank of America is putting out, another lender is putting out a program. It's called Closing the Gap, and it's called Legacy Home Loans, which is like the largest Black-owned lender. Have you heard of them before?
Mm-mm.
Okay. So Legacy Home Loans is Black-owned, and they have a program called Closing the Gap. And they have a piloted program, which is similar to B of A, except, they're not peddling the, we could, qualify you and you don't have to put anything down. You're going to have to put down at least 1% down payment, which, is typically should be doable. Mm-hmm. But they are piloting the program in ATL, in Atlanta, in Baltimore, Chicago, Detroit, Memphis, and in Philly. And the borrowers must reside in one of the census tract of one of those 6 cities that have 51% or more Black population. However, there is no restriction on where they can buy their home. So that's the big difference between the two, because they specifically put it in writing that there's no restriction on where they can buy. And again, that's the biggest thing. Also, the program is a 1% down payment, which I feel is very doable. They're doing free appraisals and home warranties, and they have financial assistance with closing costs. Now, that sounds more doable. That sounds like something where somebody's not trying to pull the wool over my eyes.
Yeah. Would you go as far as to say that you felt like this was maybe just more of a PR stunt?
Of course it is.
Than trying to help the community?
Abso-freaking-lutely. B of A and Wells Fargo are the worst banks for doing fraudulent stuff all day, every single day. Like, I would never get a mortgage with either one of them, especially if I was a minority, and I definitely wouldn't bank with them. I mean, if you've kept up in the news, especially Wells Fargo, they're even worse. Yeah. Like I said, with I feel like it's a PR stunt because, as you know as well as I know, how often those banks are in the news for doing fraudulent things.
For sure, especially Wells Fargo.
You
Yeah,
know
yeah,
what I mean? And so now they come out with this program trying to, shed light on that to take away from all the negative press, from them getting in trouble doing those fraudulent things. And again, as good as it sounds, they're not giving all the information. And like I said, the two biggest things that stood out to me was, one, where are these interest rates going to lie? Because all of that is all fine and great if, it's not worth it in regards to what they're charging on the rates. And number two, if I am being restricted, to buy in an area because they look at it as people becoming homeowners in the area that they live in, and that's, making that community better, that just screams modern day redlining to me.
It is. It's like reverse. It's like, yeah, it's keeping people in almost versus keeping people, you know what I mean? Like that is interesting. And if I could see that being a situation too, where, and I don't know if it's maybe intended to be a good thing, but like if the whole point of homeownership is that also you can pick up the equity growth along the way, but you're restricting them to an area that has less equity growth than other areas, you're not giving them the freedom to move about, then you're kind of cutting off the feet of their equity growth potential, where they could have had a better deal somewhere else, but they can't go buy out there.
Exactly.
Because of this program.
Exactly. And that's the thing that I think about. I understand, we're professionals, so we tend to dig a little deeper into stuff like this. But I understand the public see these headlines and they're like, oh, great, no money down, no closing costs. I don't have to run my credit. All this sounds great. And the first thing I'm thinking about, I'm over here like, yeah, that sounds a little suspect to me. I need to know more.
Yeah. Is there, all right, so if I put you in charge of housing, if I'm gonna put you in charge of the HUD, right, and you're gonna be in the cabinet and you're gonna run housing for the next 2 years, and you had the ability to roll out a program like this to help Black and Hispanic communities, what would that look like coming from you, who's now my new cabinet member? You're gonna be the head of the HUD. What would that program look like? Would it be something similar to this, but without those guardrails in there, or would you come up with something completely different?
It would definitely be similar to what Legacy Home Loans have.
Yeah,
because
which sounds very similar, just without those guardrails, kind of.
Yes. Okay. Yes, because they still are requiring some form of down payment. A 1% down payment should be extremely doable. And again, it also shows, the discipline and the determination that people are going to take to be able to get a home, because everybody wants things that come easy, right? They say anything worth having, you have to work hard for it.
Sure.
And I think coming up with a 1% down payment is something very doable.
Yeah. Yeah, no, of course.
I don't see why people wouldn't be able to do that. And you and I, we argue, we negotiate closing costs in deals all day. So the closing cost is neither here nor there, because right now we're in a shifted market where sellers are paying closing costs.
Sure.
So that's neither here nor there in regards to that, right?
Yeah.
And then assisting them with appraisals and, home inspections. Of course, it's a DPA program, so they may have to do the certification course and things like that. But those parameters seem more transparent than someone coming and saying, here you go.
Yeah. Just giving cash away.
That makes me question it, because it sounds good at first, but again, is it sustainable?
Right.
Can I hold on to it?
Yeah.
I don't want to go through all that just to lose it.
Sure. No, of course.
Nobody does. And like you said, you made a great point. And then are you restricting me to buy in the area that I live in? I live here because it's cheaper, but if I buy, maybe I want to move my family somewhere else. Maybe I want to get into a better school district in a different area, So that's something to think about.
It is.
And as of right now, I assume that they're allowing people to buy in designated markets.
Yeah, with a potentially predatory version of a higher interest rate, in order to take on the good PR, but not actually offer meaningful results for the community.
And and with those two banks, it would not surprise me if that's exactly what it is.
Yeah, for sure. I understand the reason for your skepticism, for sure. Obviously, we just.
And and again, we don't know, right? We don't know. All I can speak about is what the information they've released so far, and what they haven't released so far.
Mm-hmm.
And like I said, Legacy Home Loans, being that, it is one of the largest, Black-owned, lending companies. When I read that they had a similar program, and I actually like where they're piloting their program in Atlanta, in Baltimore, in Chicago, in Detroit, in Memphis, in Philly.
Yeah.
You
Yeah.
know, I like that they're you know they're doing it in those areas,
Well, so because those are predominantly
and their
black
qualifications
communities.
are a lot more believable and sustainable.
Those are predominantly black communities, right? So, and or they're in
Correct.
the neighborhoods of those communities, and then obviously the B of A one. I'm looking here. They have Charlotte, Charlotte, Dallas, Los Angeles, Miami, Detroit. So I'm guessing that Miami, maybe Miami, Los Angeles, and Dallas probably have bigger Hispanic communities versus just the black part of the community. So they're probably trying to do a little bit of Hispanic, a little bit of black on both on their pilot program would be my guess. But
Yeah,
so
and
shout
I
out to
mean, and they
Legacy.
announced this in August. I haven't heard any updates. Have you?
I haven't heard anybody who's done it. Now, again, I don't live, we don't live we live in San Diego, so we don't know. But if anybody in Detroit, Miami, LA, Dallas, or Charlotte has seen this program enacted and has any type of insight for us on if they're restricted to buy within the community and or what the interest rates look like on those, we'd love to hear it because yeah, I'm with you. I haven't heard anything.
I mean, I've definitely been, you know, trying to follow up on it because I do have clients in LA, and I do deals up there.
Mm-hmm.
So I've been, you know, trying to keep up and, you know, look online to see if there's been any updates, but I still haven't seen any. So I'm trying to figure out when they're gonna quote unquote, you know, roll this out, or if it ever comes out, because things quickly, you know, make headlines, and then people forget about it and die out, and then it may never happen.
Yeah, for sure. I think the best way to do it, I haven't checked on theirs. I just did a bunch of the earnings calls for the real estate companies, but every quarter they have to put out their earnings call. I'd be interested to see if they talked about it on their quarter 3 earnings call, to see if there was any movement there. That might be the first place I'll check. But Treya, I really appreciate. Do you have a last word for us before we jump off?
Yeah, no, thank you for having me on. And I just really wanted to ask you if I answered your question as to why I was skeptical about it.
Of course you did. Yeah, you did. And
Okay.
so, yeah, you said at the very end of your comment, you said, in short, yes, it's a bad thing. And I think that you're right. And you touched on the two things that if it's restricting people to stay within the community and there's some sort of an increased rate to the point where it's predatory, like if they offset the rate to like the risk that they're taking on, okay, I can kind of get that, whatever. But if it's something even higher to where it's starting to get into like dramatically higher interest rates that are putting the borrowers into an uncomfortable position or a position where they're not going to be able to sustain it, then it's obviously a PR move that they're just trying to do to make more money and look good as opposed to actually trying to help the community, which is what it's supposed to be coming off as.
Yeah, and you know, and I honestly feel they're doing things to look good, and they're not actually wanting to do any good.
For
So,
sure, for
but
sure.
only time will tell.
Yeah, we'll see. All right, Trey, I really appreciate you taking time and coming on and jumping on and answering these questions for us and having this candid conversation.
Yeah, no worries. Thank you so much, Jason. Appreciate it.
All right, for sure. Have a good Monday.
All right, you too.